Going on, guys? It is May 27th, 2025, and today I took a break-even trade. Now, I know break-even trades aren't like the most exciting thing ever, but I really think that this trade specifically that I took, like I've seen this happen plenty of times before, and it stomped me out while I'm up in the trade, right? Like while I'm up in the trade, this one specific thing will continuously happen, and like 5 minutes later, I'm stomped out, right? And so today I was able to recognize it, and I was able to actually bring myself to stick to, because I know better every single time this happens, but because I'm in profit, I feel like I just hold the trade and then I eventually get stopped out, right? But I saw this happen, and it just comes with experience. And today I was able to risk manage really well, and I'm just proud of the way I managed my risk here. And I would have, been stomped out for full stop loss, but today I was able to just get out break even, $6 profit, basically break even on the day. And yeah, hopefully you guys can learn something from this, and because I feel like this one thing, despite the time interval, whatever time interval you trade on, it's a really super, like a super powerful, not I don't know, I don't want to call it powerful, but it's a really good confluence, something that kind of invalidates your trade or validates it depending on how you kind of look at it. But yeah, so let me just try to just start out, like every other trade recap. I'm going to tell you guys the bias. So I do top down, and today and for the week I was honestly, well, yesterday was a bank holiday, so I didn't trade yesterday, but for the week I was bearish. I wanted to see this previous week low get taken out, right? I think for a lot of people, we wanted to see this previous week low, if I get in, if I get tapped in, and then all-time highs get, taken sooner or later, right? Because I mean, I think we can all agree that this is our main drawn liquidity for higher time frame, but we want to still, I still want to see some internal get taken out before we go ahead and take out more external. But that wasn't what was kind of happening today, right? That's not what happened today. So on the daily, I was, like I said, what I say, I told my Discord, I think I was more bull. No, sorry. I was bear on the daily timer because I know it's a little bit hard to see right now, but we were down here when market opened, and it seemed, or like around here when market opened, and it seemed like we had just taken out previous daily highs and we were accumulating orders for us to head lower. So on the daily, I was bearish. On the 4 hour, however, I was bullish on the 4 hour because we respect this 4 hour value gap overnight. We had break in structure here, kind of giving us a 4 hour market structure shift. And then on the 1 hour, I was a neutral bias. We are around here when market opened, and we were within a fair value gap, a 1 hour bullish fair value gap. So I didn't know if we were going to inverse it, react off of it. So I was neutral there. So bearish on the daily, bullish on the 4 hour, and neutral on the 1 hour. And so I kind of assumed that price would be a little bit. I thought price would be a little bit trapped today because of like the different directions on the higher time frame. And so I really didn't, if I wanted to, I told myself I didn't have to take a trade if I didn't see anything that I liked. But today I did see something I liked and I took it. Ended up not, taking profit, but it's totally fine. Like I said, I'm going to get into the reason why I feel like I really like this trade. So yeah, that's my bias. We mark out our draws on liquidity. So that's exactly what these are the things that you're supposed to follow, like the exact same things. Figure out your bias top down, figure out your draws on liquidity, and then that's when you start looking for your setups, right? So again, draws on liquidity were the London lows here. I wanted to see London lows taken out because of the fact that this is also a 4 hour fair value gap that we could potentially tap into. And then we also have our London highs. No Asian highs or Asian lows because London highs and London lows both took out the Asian session highs and lows during London. So yeah, okay, now coming in to market open. All right, so here is 9:30, pre-market, right before pre-market. A couple members of my Discord were able to catch this move. Super beautiful move. I personally didn't take it because it's not in the 9:45 macro, but yeah, we come in, tap into this 15-minute fair value gap, grab some internal liquidity, and then we start to buy up. Today, my draw on liquidity was wrong. Today, the bias was clearly bullish. And so yeah, that's part of the reason why this trade didn't hit, right? So we start, pushing up higher, reacting off this 15-minute fair value gap. And the first macro, we don't really get anything. Yeah, first macro, I don't take a trade. Personally, yeah, this also looks like that previous trade that I took, the winner I took 2 days ago, right? This looks like that a little bit different, but it does look like that. We see as soon as macro opens up, we get failure swings to the downside. We're expecting this 1 minute fair value gap. We get changes in the state of market structure shift. If I really wanted to, I could have taken this trade. Maybe considering that this is an eval, maybe I should have taken this trade, but this wasn't. I wasn't interested. Like I wasn't interested in this trade. Maybe me like 2-3 weeks ago, I probably would have taken this trade. Honestly, I just didn't find it intriguing to take this trade because it's not my model, right? So I just didn't end up taking this trade. That's fine. I think I was off the charts doing something else before the second macro opened up, and the second macro, I actually felt like I had something here because my bias right now is still bearish, or it's become a little bit stronger to the bear because we took out London highs, right? And then we're not, we don't make displacement at London highs. We're kind of accumulating, and here I'm thinking, okay, we may be getting our smart money reversal because I also like to see our market maker sell model play out here. We have a 15-minute PD array time frame aligned with the 1 minute. We have a potential market maker model. We have a smart money reversal here, and then we have consolidations areas here for us to kind of just fill in this market maker sell model potentially, and we're accumulating buy side here. And then we also put in a 15-minute bearish SMT. London high, sorry, not London. ES is unable to take this London high, and then NQ takes it as well. So we have a bearish SMT, and then on the lower time frame we do have an SMT. Did we? I don't think on the lower time frame we did. Let me check real quick. So on the lower time frame, we didn't have a clear SMT. So yeah, that's why I considered this. I told the Discord, I said, yeah, this was like for me. Like I said, I like this trade, right? I liked it. I saw potential in it, but personally, if I'm looking back on it, this wasn't an A plus. And if I was on a funded and I took this trade, I probably would have been a little bit more frustrated with myself, even if I, still broke even, because we had no SMT, and then yeah, we had no SMT, and then yeah, I think that was the biggest thing. We had no lower time from SMT, and I really like to trade if there's SMT is a pretty big confluence. And then in terms of unicorn model, we didn't have the cleanest one either. You can see there's a lot of mumbo jumbo, like kind of consolidation, accumulation here, which consolidation is fine, right? It's just building up orders for us to, kind of take sweep liquidity here, final kind of sweeping liquidity, and then for us to grab those orders and then head lower. So consolidation is fine, but we just didn't have a clean high, low, higher, high, lower, low unicorn model here and a clean breaker block. But we did have, and then the second thing is we didn't have displacement on ESC. So I guess this was like a B plus trade that I took, and good thing that I was able to kind of risk manage. So not too frustrated, but at the same time, not the best trade that I could have taken. Okay, so now actually getting into the trade, like I said, we have our potential reversal here, looking for a unicorn model. And that's what we get, right? What is it? Low, high, lower, low, and then a higher high. So this low, this high, this low, and then we get a higher high, and then we get displacement downwards. So we have our breaker block. Oh, sorry, we get our breaker block here. This candle essentially becomes our breaker block. And then, well, the important thing for me is that we have a mitigation block here. More than a breaker block, I like to see mitigation. So this down close candle get displaced past on NQ. We get that displacement, that 1 minute fair value gap here. But then, like I said, ES we don't get anything, right? But still, regardless, I'm looking to take the trade, even if price retraces into this area. So macro opens, and that's what we get, right? We retrace back into that fair value gap. Sorry. Boom. Okay. Oh my God. At first I thought I took that out of macro. I was about to say, okay, yeah. So, yeah, we retrace, we tap into that fair value gap, and then first off, we get a pretty clean reaction off of it, right? But if you zoom in kind of closer, you can see this failure swing on the 1 minute wick after reacting off that fair value gap. We continuously get like 3-4 failure swings to the downside. We just wick off of this area, which already isn't a good sign. But then this is the biggest thing that kind of led me to get out of this trade earlier. This is the big thing. I wanted to see this 15-minute candle, or I had to see this 15-minute candle close below the body of this down close candle. If I didn't see this 15-minute candle close below this down close candle, what it essentially does is it delivers a 15-minute market structure shift, or a breaker structure on this 15-minute, which is a sign of a bull, signs of bull. And then it also kind of creates this 15-minute order block, right? So it's a pretty big tell for me, like on this 15-minute especially, because I trade the 1 minute. 15-minute aligns with the 1 minute a lot. So if we kind of deliver this market structure shift, this breaker structure here, and create a order block here on the 15-minute, it's going to get a lot harder for price to kind of push down. And I've seen this happen to me a lot while I'm even up in the trade. It'll just wick off this order block once that 15-minute candle closes above the body, and then it'll just push for higher price, right? So I needed this before this 15-minute candle opened right here. I needed it to close under this line, which is the high of the body of that previous 15-minute candle. But obviously it doesn't. We wick off that area, we don't close, and as soon as that 15-minute candle opens, that's basically when I close out of the trade, right? And so I mean, people say that, you should never ever close your trade early. You should never ever, move your stop loss, which is right. Like, you shouldn't move your stop loss when you're in a trade, but I saw that something invalidated my trade while I was in it. Something that I've seen happen over and over again. And if this trade was, if it reversed from here and it kind of hit my take profit, I mean, it is what it is, right? I locked myself out right after I kind of closed out of the trade, so I wouldn't, start getting emotional, start getting stupid. But yeah, I made the right decision. I feel like I was able to learn from the past experiences and the past mistakes that I've made, right? I think that's why today was so good for me in terms of the trade that I took, even if it wasn't full profit, was because I was able to learn from my mistakes from the past. And today, like the past few days in this week, and since I blew that account, honestly, I've been looking at this like it's just different. Like, you guys got to feel what I'm feeling. Like, it's a little bit. I'm not, like the trades of like a week or two ago. I probably would have taken, I don't know. It's just like I'm not coming to the market as excited or as like looking to win big anymore. It's just more of like, if there's a setup, I'm gonna take it. If price leaves without me, I don't. Like, truly, it's just, I look at it a little bit different. I don't know if that's gonna take me somewhere. I don't know if it'll trade. I don't know if it'll change in the way I kind of change in the kind of in the way I kind of trade. But yeah, we'll see what happens. But yeah, the break even trade today. I really liked how I managed my risk, and hopefully you guys learned from this video. Biggest thing, if you guys see something that invalidates your trade mid trade and you've seen it happen over and over again, like that 15-minute order block that's been created, because look at exactly what happens after that 15-minute order block is created. After we get that 15-minute break of structure, this next 15-minute candle taps into this order block, and then now we're pushing up higher, right? So I was able to save myself from a pretty frustrating losing day. So yeah, I thank you guys for watching. Hopefully you guys learned something from this video. If I take a trade tomorrow, I'll post a recap. If I don't, I won't. And I'll see you guys later. God bless and have a safe day.